we're talking about investing it here. There's risk involved in investing. How do you figure that out so it's maybe the right portfolio for the client and gauge their risk level? How do you do that?
Well, Don, it's interesting you asked that question, and what makes me think of is, a conversation, or really it was a presentation from a gentleman that I saw, many years ago, and he talked about the difference of risk and volatility, right? And there is a difference. A lot of people don't realize or understand the difference of risk and volatility. And what he talked about was like risk is like where you have the risk of losing the entire investment, right? Volatility, like if you bought an individual stock and that company goes out of business, your investment goes to zero, right? Like that's risk, and that is the way he described it. Where volatility is more where you're in a mutual fund, right? Or you're in a diversified portfolio. You're going to experience volatility. It's going to go up and down with the market, but I don't know that it's really the definition of risk, because the chance of your money going to zero when you own hundreds, if not thousands, of individual companies within a diversified portfolio of mutual funds and exchange traded funds or whatever you're invested in, it's more about volatility.